Alright. So most forex traders in the market, they lose their money not because they don't have a good strategy, but it's basically because they don't know how to calculate their risk in advance. Before placing a trade, it's very important for you to know what you are risking in that trade. You know what you stand to lose at the end of the day. Are we together? So this is where proper risk management comes into play. So the first concept I would like to talk about, which is even the major concept, if not the only concept under risk money and risk management, is drawdown. How do you calculate your drawdown? Yeah, this is one of the concepts. There are others I'll talk about. Is drawdown. A drawdown is basically the reduction of it. Excuse me. Is the reduction of a trader's capital after a series of losing trades. There are two types of drawdowns. There are floating drawdowns and there are drawdowns that I don't have a name for it, but when your capital has been reduced already, you've closed that trade at a loss. So is either that the market is going against you, that is still floating because you've not closed the trade yet, and sometimes, just sometimes, the trade may go back in your direction, right?
Yes.
Yeah, you know those kind of drawdowns. For example, when you place a trade, the first thing you see is that it starts from a negative, right? Before it moves into
Yes.
a positive balance. That's a drawdown as well. So there are times you may hold the trade and there may be a retracement, and the retracement may cause you to be in a drawdown for a little while before market continues to go in your direction. I'm sure you've experienced that in the course of your trading. So those are
Yes.
drawdowns. But the moment you close the trade at a loss, it's also a drawdown. It's no more a floating drawdown. It is now a negative on your account. Do you get it?
Okay. Yes.
So a reduction in your capital is just what we refer to as drawdown. So you want to know how to manage your drawdowns properly. You want to be able to know how much losses you can take on an account without it affecting your psychology, because your money management works hand in hand with your psychology. Once you don't manage your money properly, you will not be in the right frame of mind and you make series of mistakes in your trading journey. That's why it's important for you to understand how to manage your money before we talk about psychology. So how do you manage your money? The next major concept I would like to talk about is risk per trade. This is how you manage your money. You manage your money by setting a risk per trade. What does this mean? It means on every trade you are placing, there should be a specific amount you are willing to risk per trade. So your risk should not be random. Your risk should always be defined. This means that if I have a $1,000 account, for example, and based on my risk appetite, I can lose a total of let's say I'm willing to risk a total of 20% of the account, which is $200, right? Yeah. So I want to know how much I will be risking per trade. I won't just take the entire $200 and risk it on a single trade, because your wins in forex is on a trade by trade basis. It is not set in stone that you will win every single trade you take. Are we together? And the truth is that even as a
Yes.
professional trader, there are times that your losses may be more than your wins. But what keeps you profitable is the next concept that I will talk about, which is risk to reward. But the first thing you have to understand is that your risk per trade has to be defined and it has to be constant. Are we together? So you can't be risking
Yes.
5% of your account on your first trade, risking 2% on the second trade, risking 10% on the next trade. You can't do that. It has to be constant at all times. That's what is going to help you remain profitable in the long run. Now, I always advise people that you shouldn't risk more than 2% of your trading accounts, especially based on the size of the account and based on how good you are trading. So for example, if I'm trading a small account, say $100 or $200, I can risk as high as 10%. It all depends on my risk appetite and what I want to achieve with that account, but that is out of experience. And most of the time I try to narrow it down to 5% per trade. Then if it is a big account, I do from 3% and I keep going down. There are even accounts that I trade just 1%. I've even traded an account where I had to trade at 0.5% because it was a really big account. Do you get it? So based
Yeah.
on the account size, that is what and your risk appetite, that's what is going to determine how much you should be risking per trade. But you should always risk something that will give you room to fight another day. So always keep it within 2 to 5%, 1 to 5% maximum. As you are starting, you can start with not more than 2% per trade. Is it clear? Does it make sense?
Yes, yes, yes.
Yes, and this whatever you are risking, just like I said earlier, has to be constant. It means on every trade you take, if you're risking 2%, you're going to risk 2% across board. Whether your previous trade,
Okay.
whether your previous trade was a loss or a win, it does not matter. Because there are times
Okay.
that people may say because they have lost money in their first trade, they want to now increase their lot size, risk more so that they can cover up for their losses. That is the wrong way to
Okay.
want to cover up for your losses.
Okay.
Yes, you don't cover up
Okay.
for your losses that way. So you have to define your risk and it has to be constant. And above all,
Okay.
whatever you are risking must be something you are comfortable to lose.
To lose.
Yes,
Hmm.
whatever you are not comfortable to lose, you should not risk.
No risk it.
Excuse me, you should not risk it. Do not
Okay.
risk it for any reason. Only
Okay.
risk what you are comfortable to lose.
Able
If
to
it is
lose.
0.5% of your account that you are comfortable with, then start with that. With time,
Okay.
you can grow and up your account size and all of that, right?
Mm.
So if it is
Yes, yes.
0.25%, start with what you are comfortable with.
Wait.
But
Okay.
yes, but the goal of it is that your risk has to be constant per time. So what
Okay.
if you want to increase a particular risk on an account? If you are increasing, let's say from 2% to 5%, you must make sure that your the rest of your trades must also be as must take that same order. 5%,
Okay.
5%, 5%.
Okay.
Do you get? So to even
Okay.
make it easy, you could have different accounts that you risk different different percentages on. So you could have
Okay.
accounts that you risk 2%, you could have another account that you risk 5%, 10% as you wish. Do you get?
Mm. Yes,
Yeah.
yes.
All right, perfect. So
Okay.
the next major point we're going to look at is risk to reward.
Okay.
Very, very important for you to understand this. Now, how many times do you need to be right to be profitable? This is a question that I have here. 70%, 80%. You don't need to be right 70% of the time or 80% of the time to be
Okay.
profitable,
Okay.
right? In
Hmm.
fact, the truth is that it says, I'm sure that you are thinking of a number that is higher than 50%. What if I tell you that you can be profitable being right only 30% of the time?
Hmm.
Yes, you can be profitable being right only 30% of the time.
Hmm.
So over the times I've traded, I've come to realize that in fact as a professional trader, sometimes you take more losses than wins. That's the
Hmm.
truth. But
Okay.
it is this phenomenon of risk to reward that is going to keep you profitable in the long run. And that's what
Okay.
I want to teach you now.
Okay.
So what is a risk to reward? A risk to reward simply refers to the percentage of what you are risking to the percentage of what you are looking to get as reward or your profit from the trade.
Hmm.
Yeah.
Okay.
So what this means is that if I am using a risk to reward of 1:1, so this is 1 to 1 I wrote here, but usually you're going to see it written as um oops, sorry, wrong two. Let me pick the right two. So you see something like this 1:1. Do you
Okay.
get? It means 1
Yes.
ratio 1. So if you're risking 1:1, it means for every time I risk one, let's assume you are trading with 1%, right? For every time I risk 1% of my account, I'm willing to make 1% profit.
Some
Or
profit, okay.
for every time I risk 10%, I'm willing to make 10% profit.
Mm.
That's what 1:1 is. Well, it is not the best way to trade because it is not going to be a very profitable one except you have a strategy that the win rate is very high.
Okay.
Do you get?
Yes.
Yes. So, but if you're trading with a risk to reward of 1:3, it means for every time I trade, I put in 1% of my account. I want to make 3 times of whatever I put.
That right? Risking, okay.
Yes, that's what
Mm.
it means. So
Okay.
usually I like to keep my risk to reward at 1:2. By now you already know this.
Yes, yes, yes.
Oops, what am I writing? I like to keep it at 1:2.
Okay.
You already know. So yeah, there are times I go for 1:3 and more as well. But I never do 1:1.
Okay.
Now,
Okay.
so I have a little table here. Let's try to go through this table. So if I'm using a risk to reward of 1:1 and
Okay.
on the other side using another of 1:3, let us
Okay.
see how the trades will play out. So I took a
Okay.
total number of 10 trades on both sides of the table,
What time?
and my wins I won only 30% of the time, which
Same.
means 3 trades, right?
Yes.
The,
Yes.
these 3 trades does not need to come back to back. It can be random.
Okay.
Yes.
Mm.
So I won 3 trades, and my stop loss in dollar is $100. So
Okay.
for every of those trades, I'm going to lose $100, right?
$100.
Yeah.
Yes.
And because this one is 1:1, if my risk is $100 and my reward is 1:1, that means my reward is also $100, right?
Yes. Yes.
Yeah. But on the other hand, for the 1 to 3, if I'm risking $100, my reward is going to be what? $300,
$300. Yes.
right? So
Yes.
out of these 3 trades that I won at $100 profit each, look at what it gave me. $300 profit,
Mm.
right? But on the
Yes.
other hand of 1:3, look at what it gave me. $900.
$100.
Yeah. I lost a total of 7 trades, right? That
Yes.
7 trade amounted to $700 and it put
Yeah.
me in a negative of $400,
Dollars.
right? Meanwhile,
Yes.
in
Yes.
this case, I lost that same $700, but it put me in a positive of $200.
$200.
So you see that I only won 3 trades out of 10 trades, but because my
Trade.
risk to reward was well defined, I still
Okay.
came out profitable after 10 trades, which I lost 7.
Okay.
Yes. So
Mm.
let's do this for 1:2, which is usually what we use the most. Okay. So we have let me look for a clean slate. Yeah. So we have 1:2, right? I
Yes.
took a total of 10 trades, right?
Mm.
I won 3 and I lost
That's 7.
7, right? So if
Yes.
I and is a 1,000, no, let's use a numbers. Let's say is $100 account, right?
Yes.
And I'm risking 2% per trade. 2% of $100 is $2, right?
Yes. Yes.
So I'm risking, oops, I think I should use the, give me a sec. Let me use a different tool. So 100 USD account, risk is 2 percent, which is equal to what?
20.
No,
I mean, 200.
yes, $2, right?
Yes, yes, two.
Yeah. Then what again? My risk to reward is called RR.
Okay.
RR
Okay.
RR is 1:2, right? So
Mm,
I won 3 trades, I lost 7 trades,
7.
right? So
Yes.
let's do the math now and see how we'll come out. So these 3 trades that I won, $2 per trade, 2 times 7 is what? 14,
14.
right?
Yes.
Then did I just do 2 times 7? No, that was wrong. My risk is, yeah, 2 times 7. I'm correct.
Yeah, it's correct. The
Yeah,
other one will be 6.
yeah. So this will be but is 4 times 3 is what?
4 times 10. 12. Times 2.
1:2. Are you sure?
I'm trying to. You say 4 times 3.
It's 12.
It is 12, yes.
Yeah. Since it's 1:2, I'll be
Mm.
equal to 12.
So,
Okay, so for this account size, I'm trying to do the math as well. Let's see. So
okay.
yeah, I took 7 losses, but I ended up losing just $2 from my capital.
Mm. Mm.
After this massive loss, you see that at the end of the day, all that I lost was just 2% of my
Just
account.
2%. Mm.
So you see how the risk to reward can help you manage your money properly.
Mm. Yes.
But if you were taking these trades randomly, maybe you would have lost like 10 or 20% of this account already. But even after 7 losses, just winning 3 trades from a total of
Yes.
10 trades, I was able
Then,
to just to still keep my accounts in good order.
put
So
on
this
that.
means that if we won 4 trades and lost only 6,
That place will be 14, 14 and 12.
that's 14 and 12, right?
No,
No,
16 and 12.
4 times 4, 16, yeah,
16. Yes.
and this is 12.
Yes. Okay.
Yeah,
Mm.
do you get? So we close with a
The
profit of $4.
$4. Mm.
So if your risk is not proper, this is why a lot of people say forex is scam, because they do not
Yes.
really know how to manage their money properly.
Mm. Mm.
If you know how to manage your money properly, you would really do well in the market, even using a risk to reward of 1:2.
Okay.
But yeah, you
Mm.
can do 1:3 as well. Imagine if this was a 1:3 trade, right?
Mm. Mm.
It means for every time we raise $2, we are making $6.
$6.
So
Yes.
yeah,
6 times 4. That's
yeah,
24.
let me copy this and make a second one for one.
Okay.
Let's compare. So 6 times 4 is what?
24.
2 times 6, 12.
12. Yes.
Where did I just write that?
No be far now. Eh.
Can't find it too.
Okay.
24, 12, 1 ratio 3. I don't know where it's going to. That's something.
Why is it disappearing?
I really don't know. Well, but you understand the concept already.
Yes, yes.
Yeah. So that's just the way it works. It's as simple as ABC. So you could still use a risk to reward of 1 ratio 2 and be very successful in your trading journey. You could be very, very successful. Very, very successful. But it's important that when you pick an account, before you even start trading it, you have to do all of these maths and see what will work best for the account. Do
Okay.
you get?
Yeah,
Yes, so
yeah.
based on our trading strategy, the minimum risk to reward that we catch is 1 ratio 2.5.
Okay.
Do you get? Our
Yes.
target is minimum 1 ratio 2.5. There are
Okay.
times we do 1 ratio 2, right? For example, let's measure
Mm.
this US oil trade that we looked at yesterday.
Okay.
Let's see. Let's see. Let's see what it would have given us. The network is not really working well.
Mm.
So I said let's check out this one we did on US oil yesterday. That our case
Okay.
study.
Okay.
Let's try to study the risk to reward and see if it was great. Okay, so this is US oil. This was our trade, right?
Yes.
This is 1 ratio 2.12, and our goal is this high. That high was 1 ratio 4.47.
Mm.
Yeah, 1 ratio
Okay.
4.47.
First of all.
Yeah, that's almost 1 ratio 5. At 1 ratio 2, I would have taken a little bit above 1 ratio 2. There's this noise from your background. Are you sitting close to a fan?
Yes, yes.
No wonder. At 1 ratio 2, I would have taken 50% of my trade off. Then I can now
Okay.
write the rest. At 1
Okay.
ratio 3, usually you know the two we use now is to pick your,
Yes, yes, yes.
and you want to
The
take
short,
them
the
as
long.
standard. Yes. So
Okay.
at 2 standard deviation, I want to take another one off. So I'll just make it 3, 1 ratio 3. I'll take another profit off at 2 standard deviation. I could even run all the trades up to 1 ratio 3.
Okay.
I could run everything instead of taking partials because I know this is the high we are going for. I'll close everything
Okay.
at 2 standard deviation, and that would be
Okay.
1 ratio 3 point something, 1 ratio 3.
Okay.
Yeah, which is a
Okay.
very good trade.
Okay.
Yeah, so basically our target is 1 ratio 2, 1 ratio 3. Sometimes we even do up to 1 ratio 5. Because in this
Okay.
case
Wow.
now we
Wow.
did 1 ratio 4.5. This trade was 1 ratio 4.5 in total,
Okay.
and it TP'd,
Okay.
right?
Wow.
Yeah,
It's even higher than that.
exactly.
Wow. Wow.
Yeah, so I've just showed you basically how to manage your money. Number one, your risk must be what? Defined, right?
Defined. Yes.
Once
No
your risk
random.
is
It's
defined,
selected.
you have to now have your risk to reward must be worth it.
Hmm.
Never cut your profits too early.
Okay.
When the trades are running, let it run to your reward.
Okay.
Don't be in a hurry to close some trades because you want to make some quick money.
Okay.
You won't be profitable in the long run that way. So it's not
Okay.
about
Okay.
just taking what you see on the table. Does it align with your trading plan?
Plan.
Yes, it has to align. So if you are targeting the minimum of 1 ratio 2, the only time you can take partials on that trade should be when you have made 1 ratio 2.
Okay.
Do you
Okay.
get?
Yes. Yes. Yes.
And if you want, you can close based on the setup. You can decide to
Okay.
close everything at 1 ratio 2, but do not take profit before 1 ratio 2.
Okay. Okay.
Yes, but you should know that this also is dependent on the trade situation.
Situation. Yeah.
Maybe,
Because
yeah,
even in that way, because sometimes maybe we are seeing a what's it called, an uptrend, and
yeah,
maybe two breakouts and retests have happened already.
yeah.
We only have like four breakouts. I get like maybe four. So sometimes, because I think someone posted something on Twitter, maybe I think last week, that the person marked 1:2 or something, but the thing did not touch it. It nearly, or it almost touched that part.
Mm-hmm.
So I don't know if I could say maybe the person got to the trading late. I don't know, like maybe the person started the trading late, or just
Yeah,
as you said, the situation or something.
it
So
is dependent on a lot of things. Either they entered late or the trend just changed. You can't tell when a trend will change until it has
change.
changed. Yeah, so it's all dependent. For me now, it's dependent on the time of the day. For example, if
Okay.
news is coming up in few minutes, because I don't like trading during news, I'll close my trade.
Okay. Okay.
You get, sometimes I may even close it at a loss, or if it's in small profit, I can break it even, or just take the profit and go and rest. Do you get?
Okay.
Yeah, and
Yes.
also the time, maybe it's night. I don't really
Okay.
like holding trades at night, depending on the pair that I'm trading.
Okay.
Yeah, so
Okay.
these are some factors for me. But usually when I
Okay.
analyze a trade, before I take the trade, I want to see if it has a high chance of giving me at least 1 ratio 2.
So okay.
If it does not have a
Okay.
chance of giving me 1 ratio 2, maybe because the next target area is not up to 1 ratio 2, I won't take the
Okay.
trade. I only take a trade
Okay.
where the next target area is at least a minimum of 1 ratio 2.
What
That is
should
a
two?
trade that is worth taking.
What should 2 point something? What should two
Yes,
points? Maybe 2.1, 2.2,
exactly,
2.3.
exactly. Why I
So
just add that 2 point something is just to cover for any mistakes
like
I have made in my
okay.
calculations.
Okay. Okay.
Yeah,
Okay.
yeah, yeah.
Grab. Grab.
So
So
that's just it. That's just it.
okay.
So what I would like you to
Okay.
do is to try and when you're marking up your next setups, try to
Okay.
see the risk reward and try to follow it. Take a
Okay.
series of trade, maybe a series of 10 trades, right?
Okay.
Then I want you
Hmm.
to journal your performance on those trades and the risk to reward that you used. I'll show you how to use
Okay.
a journal. Maybe um
Okay.
let's see, I
Okay.
can't give a date yet. I'll show you. But for now you can just use a pen and a paper and journal. Trade
Okay.
one, taken on 10th of December or 25th of
Okay.
December 2023.
Okay.
Risk 2%. Reward so risk to reward 1 ratio so and so. Risk
Hmm.
2% of accounts. How
Okay.
was your behavior in the course of the trade and all. Do you
Okay.
get? Yeah,
Hmm. Okay. Okay.
yeah.
No problem.
So can you do that? I think I have a Notion
Yes.
file here.
Yes. Yes. I'll get it.
Let's have a Notion
In
file.
fact, in one of the ones I took,
Yeah,
so like the one I was just applying the TP and SL, I had to write it down because I didn't
exactly.
want to. So you get, so I had to write down the take profit and stop loss parts so that it would even be easy for me if I want to take. Like I actually took multiple that time. I think two or something.
Okay.
So that's what I just practice. I just practice that part, sha.
All right then, it's fine.
Yeah, yeah, yes, sir.
Yeah. All right. So that's going to be it from me for today.
Okay, I
Do you
have
have any
questions.
questions? Yes, exactly.
Yes, I do. Okay,
Yeah.
let me just say in that risk reward part, you
Yeah.
said the minimum is 1:2,
Okay.
the risk reward. So now,
Yes.
let's assume that there is a structural point that I'm trying to reach for, having marked the 1:2 part.
Mm-hmm.
So how will it be easy for me to, I mean, do I have to mark the second, maybe the second possible profit I may take, even when that ratio 2 part will not even reach, maybe it will just reach the half of the structural point, and I'm trying to mark another part. So do I have to do the markup first before even the market will reach the place, or I'm just, that's what I'm trying to, I don't know if you
Okay.
get my question.
Now, if you see this setup that we have here on US oil, this
Okay.
was our structural point, our 1 hour structural point, right?
Yes, yes.
I'm on the 5 minutes time frame, but remember this is the 1 hour structural high. That's my
Yes.
target. So what
Mm,
was the first thing I did before I even did all of this Fibonacci and the rest? I carried this vertical line and I marked, no, the horizontal line rather, and I put it
okay.
on that high so that I'll
Okay.
know where I'm targeting.
I get it. Okay.
You can even tag it if you want as usual. You can call
Okay.
it profit target, right?
I get it.
So I know that
Yes.
that's my profit target there already. It's very clear. So now that I have my profit target, all I just need to do is carry my Fibonacci, do all my entry, everything I need to do for my entry. Then I now want
Okay.
to measure, okay, based on my entry and where I want to place my stop loss. So that structural point is the risk to reward up to 1:2. If it is
Okay.
fine, if it is more than, I can decide to take some profit along the way or let the trade run. But usually,
Okay.
as I've told you, no
Okay.
matter the structural point, if I hit 2 standard deviation, I like to take profits.
Okay. Okay.
Do you get 2 standard
Yes.
deviation? This is two
Okay.
standard deviation is already 1:3.
Okay.
So I would take 80% of my trade off at 2 standard deviation.
Okay.
Then
Okay.
I can go and take the remaining 20% when it comes to my structural high, which you
Okay.
see took a long time.
Okay. Okay.
Yes, it took till the next day. So you may not be
Okay.
very patient and you may be scared with all of this that happen. So that's why it's
Okay.
always good to take some things off first, especially when you've made some
That's
good
some
profit.
profit. Yeah, I
Yes.
get. Okay. Okay. Thank you, sir. So another question.
Yeah.
When I was doing the, because I did some back test today, some back
Yeah.
testing.
Yes.
Actually, the one I did, I think I have to correct myself, because from the one monthly time frame that I was marking,
Yeah.
I think I marked from last year. So when I got to that 5 minutes time frame, the tape could
Mm-hmm.
not let me see it again. It said 5,000 bars or something that I have to, I don't know. So I think I have to mark it from the main part that it has touched. I mean the monthly time frame.
Oh no, this is why. So there's a limit if you are using the free account on
Okay,
TradingView. Yeah. Yeah. So for you
okay.
to access that, you need to subscribe for the premium packages. So
Packages,
basically, just
okay.
try and backtest on the most recent data.
Fusion. Okay,
Yes, I think there's a
okay.
way
I
we
think.
used to get the. Don't worry. After the class, we'll talk about the premium package.
Okay, okay,
Yeah,
okay. So, and another question. Um, while I was marking up, wasn't last night or I think just this week. So I was trying to check a structural point. So although I could see some, but there was one that was even the highest or the lowest, maybe the bearish and the bullish move structure or something. So but it's very very far to the place that. So even the ones that how do I say that were recently formed. I mean the structures that were recently formed, they were high, but not as high as that one. That
sorry, I'm a
very
bit
one that is
lost.
very distant. So I
I'm a
don't
bit
know. You
lost.
said
I'm a bit lost. Hang on. Let me end the
okay.
recording so that because I don't want the
Okay.
recording to be too long. I'll take
Oh,
the
okay,
rest of your
okay, okay.
questions
Yeah, I thought you.
afterwards.
Okay.
Yeah.